I bid you all good morning, good evening, and good night, wherever you may be watching this transmission. It is I, Mike Martins, from A View from Space. Just kidding. That's good old Art Bell used to say that, A View from Space. So what's going on, guys? Well, I got a story and a half I need to share from you, and this is a really well-written, in-depth written article. So we're going to go into we're going to deep dive into this article. We're going to unpack this. This is extremely important. So what are we talking about? Let's get to the meat and potatoes right now. China will be the first country to launch a digital currency. What happens then? So this is a process that's been in the works since the late 1980s. So they've been working on this for a long time. China knew in the 80s that if they become in a position of an industrial position, just like in the early 80s, we started selling off our jobs, all our manufacturing when it got sold off to China. That ain't any new news. We know this. But the problem is they needed to put positions into play that's when they decide to go full-blown hardcore communist and really start shutting down the country, they need to avoid capital flight. And China's been suffering from capital flight since about 2010. They started really turning up and cranking up the volume on wealth leaving the nation and being parked into housing into Australia, New Zealand, Canada, United Kingdom, and Western United States and New York and Massachusetts. So money has been parked in real estate there, leaving the locals out of reach from their own housing and basically making it unaffordable all over the Commonwealth. So let's deep dive into this article, guys. I really want to go to Article Scan and deep dive this for you guys because this is really important because it talks about specific major movements that's being made. Remember, it's your money, it's your wealth, it's you. This is what you're working for, right? So China will be the first country to launch a digital currency. What happens then? This is the most important factor. What happens to trading partners? What happens to deposits? How does the money move around? Well, they break it down in this article really well. It's by Tyler Durden here, our friend Tyler Durden over at Zero Hedge, if you guys want to check it out yourselves. So China may be the first country to launch a central bank digital currency, CBDC. The Chinese CBDC, named DCEP, will strengthen the position of the central bank and help to further modernize the Chinese economy. So they're rolling it out. The language is going to be modernizing, coming into times. So here's the deal. With capital flight leaving, going digital is the best way to track money, every move the money makes, and they could also put a stop to having digital money buy Bitcoin or other bit currencies or other digital currencies. They'll just put a block to it. They easily put a block, or saying that this transaction is not noticed, or this transaction isn't available. That's how they start controlling what you're allowed to buy, what you can't buy. So so it goes in depth. It goes deeper than you could ever imagine, right? The DCEP will probably also be available in China's trade partners, to begin with Africa. Now, China's been buying up Africa. I made a documentary like 7 years ago, Africa for Sale, how China's moving into Africa, basically buying it up for cents on the dollar, giving them loans that they know that the Africans can't pay back, and the Chinese roll in and start clearing out timber, clearing out resources, just setting up mines wherever they feel like, and sending out geologists, not hiring the locals that live there so they can remain in poverty while the Chinese get richer, right? The DCEP may strengthen the international position of the renminbi, to determinant of the euro. The arrival of the DCEP should be a strong wake-up call for Western, especially European policymakers. So most central banks are busy preparing for the potential introduction of the central bank digital currency. The CBDC is a digital currency issued by the central bank. It is sometimes referred to as digital version of a banknote, but in many cases, this is not correct. There are indeed many different potential variants. So there's the central bank, there's the CB reserves, and then there's a token-based. So there's banknotes and coins that are physical, and then there's digital, right? Then you got the commercial bank deposits, so check, wire, debit, cards, and then you got bank digital currencies, right? And then you have private provider, then stable coins, example Lira, and prepaid cards. And then none, Bitcoin, most cryptocurrencies, precious metals. So, so far, virtually all central banks are keeping their options open whether a CBDC will ultimately appear. So they're obviously kind of keeping it in the down low. Should we do this? Are we going to do this? We know they're going to do it. But the question is, when are they going to pull the trigger? Well, here it is. China is pulling the trigger. China is actually announcing what's going to happen. Let me just wet my beak here for a second. Sorry, I was shoveling snow the other day and caught a little bit of a sniffle. Okay, China from cash banned to almost completely cashless in 10 years. So they're starting it. They're starting this in February of 2021. They expect 10 years time where they start eliminating the currency. So they're going to give X amount of time on paper, X amount of time on any checks or anything, X amount of time on digital non-digital, like non-crypto digital transactions. Maybe it'll take a little longer for PayPal, a little longer for other different institutions to jump on board, so to say, if that makes any sense. So China, from cash ban to almost completely cashless in 10 years' time. So this is very important. Not so long ago, retail payments in China were still almost entirely made in cash. Yes. Everything, like a lot of people would carry around stacks of cash when they go shopping and stuff, and it'd always be cash. There would be no digital, there would be no credit cards, there would be no debit cards. And you got paid, like 80% of people, up until like not too long ago, were getting paid entirely in cash. So what do? They use that money to live. There has been a revolution in payments traffic since the time, and China now is leading the countries in cashless payments, unlike any other country, such as Netherlands, Sweden, China. In China, this development did not originate from the banking system, but it was induced by a few key apps from relatively young fintech companies such as WeChat, Tencent. Isn't WeChat under investigation with our Prime Minister here in Canada? And Alipay and Financial, these parties that form a kind of extra layer between the banks and their customers, so kind of like middleman in-betweeners, right? Now have a collective market share on more than 90% of Chinese payments, cashless retail payments. The Chinese cashless payment system is already able to settle approximately 100,000 transactions per second. So that is very impressive right now. And then 5 years from now, they're going to be settling 2 million transactions per second. So it's impressive for now, but so here it is, guys. This is why I wanted to do a really deep dive here to kind of show this to you guys and the importance of this and how it's going to be rolled out. So Exhibit 8, an illustration of the workflow, DCEP, okay, issuance and circulation. So this is the issuance. So this is you. You're the consumer, okay? So either A, you go into a store, they exchange your cash on the spot for digital currency, or you exchange with your debit card on the spot for digital currency, right? Then what happens? So they actually verify it, exchange it on the spot. So this way, cash gets removed permanently from the system, and debit transactions, that transaction becomes a permanent transaction into this digital currency. So it's basically going to be trading in this. So here it is. You basically get this back, but hold on. It's not just that. It's basically when you're purchasing something at a store or this, they do it immediately on the spot for you, right? But now, let's say you use the bank. So you open a wallet request, you go to the banks, okay? Then the banks send a verification request, and then it gets verified, and it goes back here. Same thing when you're waiting in line at the store. Instantly, the bank receives notification, the verification gets requested, gets sent back, and you get paid, or you get in digital currency immediately. Thus, removing the digital deposits and removing the cash deposits permanently to be destroyed or to be removed off the table so that the currency is built within the digital system, right? So there need to be a backing to the system. So the backing of the system would be the digital currency itself, as opposed to having paper or digital, non-digital currency payments as debit cards or visas. So that's how you see it. It's a very simple system, but it's a way to eliminate the cash. Once you eliminate the cash, and it can take up to 10 years. There's cash all over the place. People are going to be finding, people are going to pass away. They're going to find a bag of money underneath their bed or something, and they're going to start eliminating the cash as they go, right? The technology that can be used by the public for payments is based on a traditional payment technology and not a blockchain technology. This is the only way to achieve a necessary scale. The aim is to reach the capacity of 300,000 transactions per second. The central bank might itself use blockchain, for example, for the wholesale transactions or settlement of the DCEP between private banks, although the DCEP is cashless currency that will be held in an account with a private entity. There is also the possibility of using token-based functionality, for example, a chip to effect a peer-to-peer payments, even where there is no internet. So there could be a chip that if you're offline, you're in the mountains, or you want to rent a camel, or you want to rent a donkey for the day to get you up the mountain, obviously the peasant working there isn't going to accept, won't accept any currency. So there's going to be a chip-to-chip transaction sequence that happens. So this way you don't have to be on the internet, right? This is especially needed for successful adoption in the rural areas of China. So rural areas too of the United States, Canada, all over the world is like 90% of the world is still rural. 10% is all heavily city developed, right? 85% is still rural, right? So this token-based functionality will be widely used, and a result which the DCEP will compete with cash. A sizable trail has been running for several months, which tens of thousands of people have been participating. So they already rolled this out, they're trying it out, and it's become successful so far. According to my sources down in Shanghai, they sent me a photo of what their card looks like, and basically with the chip on it, and then someone sent me a screenshot of what their barcode looks like on their phones too. And it shows basically the transaction that has been made, and it has been transferred into digital. So you could transfer, go back here. Let's go back here. You could go to the bank, request, goes to the bank, gets verified, goes back to you. Or you're buying something in cash, it gets circled through. And if they want to do, how many? 300,000 transactions per second. Okay, now this is an important part here. Although China does not have a free cross-border capital movements. Now that's the big deal. Capital flight is a common and substantial phenomena. Capital flight can occur in various ways and is often difficult to trace. For example, internationally trading Chinese companies can, for instance, can manipulate invoices, as a result of which money can be transferred abroad. People can also use Bitcoin system to hide money from the authorities or transfer it abroad. And that's what's been happening a lot through our real estate for the last 10 years. Capital flight has basically destroyed the middle class, working poor across the Commonwealth. So if you guys know what I'm talking about if you've been watching this channel. The Chinese government, like its counterparts in Europe and the US, is concerned that the stablecoins could assume an important role as an alternative to regular money in circulation, but also may develop into a vehicle for capital flight. Read how the Chinese used illegal online gambling tethered to launder over 1 trillion yuan. We talked about this on the channel, the money laundering. Billions, hundreds of billions of dollars laundered through Canada. We're looking at 700 billion now. We were at 200 billion that they caught for 3 years. Now, the entire time from 2010, we're looking at $800 billion, 7 to 800 billion laundered through Canadian real estate. And that's like 1 in 3 homes in Canada. So that's where the locals are going to be homeless, right? Stablecoin are cryptos like Bitcoin, but unlike Bitcoin, they are at least a theory. Secured by financial assets, when Facebook announced in April 2020 that it intends to add a national stablecoins to its Libra, a digital currency basket that it announced in 2019, central banks reacted immediately by devoting more urgent attention to the CBDC 23, such as stablecoins, could, for example, create the possibility that people could use Libra stablecoin to transfer money abroad. With this DCEP and the PCOC intends the slow momentum in private stablecoins. This is also important in consideration for the Western banks. So I kind of wanted to throw this out there. So it shows that the Chinese is working very actively on strengthening the renminbi's international position. So they want to be the world reserve currency, but China doesn't have the military. It's all like Soviet stuff. Like China is in a very backed up position right now. And I'll tell you why. And this is probably why the capital flight left, because you got Taiwan pointing missiles at China. You got all the countries like South Korea. You got the glove of America, the glove over Japan, pointing missiles at China. You got the Philippines. You got all these countries that are basically focused on China. You got India along that Indo-Sindo border dispute with China. So China is not in a really good position. So they need to focus internally on managing their capital flight, because they haven't done nothing about it since I don't even know. They've been trying to, and they've been threatening people, and they've been arresting people overseas, and they've been taxing people overseas. For citizens or former citizens of the CCP are being taxed in other countries to pay that money back to their governments. So Huawei is working closely together to achieve this, while still a long way off the scenario in which first parts of the African, but later maybe Asia, Latin America, even some European economies will soon use the renminbi for cross-border, and in due course also domestic transaction is gradually becoming more plausible. So there it is. Eventually, this is what they're hoping, is that more and more countries will start using the renminbi as a base currency for trade. And I think it's since World War II, or before World War II, it was the American dollar was put in place. I think it was after World War I. The American dollar was put in place as the world's currency, right? One may also expect China to try to get all the countries involved in the Belt and Road Initiative, which that's falling apart right now, to use the DCEP and therefore the renminbi. So this basically, they're forced to use this digital currency that's tied to the renminbi. So the Americans got the world by using the petrodollar. If you guys remember what I'm talking about, the petrodollar was used for many years. Basically, if you wanted to purchase oil, let's say you're Cuba, or let's say you're Dominican Republic, and you want to purchase oil in Dominican Republic to basically refine whatever you have to do with it. So as a country as Dominican Republic, you need to purchase first US dollars from the World Bank, and those US dollars get purchased, and when those dollars get purchased, you could buy oil. So that's the petrodollar. The Americans have been backed, or American currency, the world currency, has been backed by the petrodollar. And it's led to a lot of useless, senseless wars that shouldn't happen, that shouldn't have happened. We know that, right? And also the petrodollar basically was pegged as is. So when countries, let's say like Saudi Arabia, wants to trade in euros, if you guys remember what happened to Iraq when they wanted to trade in euros, or they want to get a gold-backed currency, you know what happened with that in Libya. So you guys know what I'm talking about. I gotta speak in code here, but a lot of people understand what I'm trying to say here. So anyways, let's just wrap up this article here real quick. So there it is. One may also expect China to try to get all countries involved in Belt and Road. We discussed that. And last but not least, if this last model is adopted, the Chinese CBDC model would make more like a full liquidity reserve bank than a real CBDC. A full liquidity reserve bank is a bank that would hold 100% cash reserves with the central bank against the CBDC payment accounts held with it. So here it is, guys. It's really blurry here. So it shows deposits, cash into CBDC. So there's reserves that back the actual CBDC. So they're not creating CBDC out of thin air. There's cash. There will be reserves or banks that would hold 100% LTV, or like it's kind of like not a loan, but the bank will have the money to back up its CBDC so that there's some sort of trinzant backing to it, right? And the renminbi, this currency is going to be backed by the Belt Road Initiative and economic backing, right? They can't use military because the military is kind of not there, right? But in the Chinese model, there would be an additional institution created. The existing financial institutions would also offer additional accounts that would then be 100% backed by central bank reserves. So they could take that currency, package it, back it, and have reserves. Statements from the PBOC also suggest that the direction is more towards synthetic model. Technically speaking, it would represent a less initiative move than the true CBDC. So it depends how they take it. If they want to take it this way, at least they have the currency in their coffers to back up what they have. So this is a very important, very well-written, in-depth written article. I suggest you guys go to Zero Hedge, written by Tyler Durden, Wim Bonstra, so of Rabobank, Robowabank. So guys, check this out if you can. Guys, don't forget to subscribe to the channel, be part of the channel, and leave your comments below. This channel is based off of you guys, the people. You guys give us information. You guys obviously tell us what's going on in your neck of the woods, and we cover the entire Commonwealth here. Let me know what you guys think. Thanks for watching. We'll talk soon.